Welcome to the Transparent FX Academy. My name is Nick and I'm a top hodler on TradingView. And as a top hodler, I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now, without wasting any more time, let's get straight in the charts to see what kind of good trading opportunities we can be finding today. The pair that I want to speak about today is AUD-CHF, and the reason for which I want to speak specifically about AUD-CHF is because it is a very interesting pair at the moment for a nice trading opportunity. So obviously I want to share the analysis and keeping it as educational as possible. I will also show you exactly what you have to be looking for in the market when you're actually scanning for opportunities or developing a trading strategy. Now, as usual, the structure in which I will perform this analysis is first looking at the market from a technical perspective on the different time frames, so performing a full multi-time frame technical analysis, and we will then go and see what we have from an order flow perspective, so what hedge funds are doing with the commitment of traders. And obviously, if you're able to position yourselves with the big players in the market, you obviously have an advantage over your competition in the market. Now, without further ado, let's get straight in analysis. Now, on the monthly, what we can see. Now, on the monthly, we can see that the market has provided a nice impulse to the downside, followed by this correction. Now, the market retraced all the way to the previous support, now to resistance. So this retracement is currently testing a strong level of previous monthly support, which is now turned resistance here. In fact, we can see that the last time that the market went to the upside was here. So this is exactly the previous support, now to resistance, which the market tested and rejected to the downside, which is exactly what you want to see after the market tests a level of previous support to resistance. You want to see the market reject the area, which is exactly what we are currently seeing. Now, another thing that we can view from a monthly perspective is that after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of the impulse, what we can see is that currently the market is breaking back below the 0.786 of the Fibonacci taken on this monthly impulse. And if the market in 4 days and 10 hours will confirm a break below this 0.786, then what we can expect next month is a retest of the 0.786 before a drop lower to the 0.618. So very important to see how this monthly candle will close in 4 days and 10 hours. But at the moment, situation on the monthly is quite clear. We are rejecting monthly resistance. Let's go down on the weekly and see what kind of situation we currently have from a weekly perspective. Now, on the weekly, what we have is the structure, which is very well defined. In fact, we can see that we had very strong weekly resistance all across this zone. The market broke this zone to the upside, went for a retest and respected it as support. And then the market broke below the area. So at that point, previous support is now turned resistance. The market tested it and rejected it to the downside very aggressively. And now that the market has broken all structure to the downside, what we can expect is for the market to go for a retest of the structure at the previous support, which is now turned resistance here, which is again exactly what the market is doing. The market is going very near to the resistance that we have here, from which we do expect a rejection to the downside and a continuation lower. What we can also see from a weekly perspective is that the market has created this candle here. Now, when you see a candle like this with a very long wick and a small body which is red, you expect the next candle to fill in the wick. So when you will see, for example, on the weekly or also the monthly or daily time frames, a candle like this with a wick which is at least the size of the body, what you expect is the next candle to fill in this wick. And the reason for this is that this wick on lower time frames, for example, in this case on the daily, this wick is simply a retracement. And after an impulse and a correction, what you expect is the continuation lower. So the wick that you see here on the weekly is simply showing you that on lower time frames you have an impulse and a correction, after which you do expect the continuation to the downside. So at the moment, monthly and weekly are showing the same direction. Let's go down on the daily and see what kind of situation we currently see from a daily perspective. Now on the daily, first of all, we can see that we had definitely spoke about AUD/CHF quite a few times in the past. We spoke about it after the market had created this information on the weekly, and when the market was here, I explained all the reasons for which from here we wanted to see the market complete the pattern at the neckline. And then again, when the market was here, I made another breakdown explaining all the reasons for which from here the market needed to create the move to the downside. And again, that is exactly what the market did. And I will link in description these two previous analyses so you can go and check them out for further reference and more free education. You find everything linked below. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. But at the moment, what is the situation? Now, at the moment, we have exactly what we expected from a weekly perspective, the impulse and the correction. And this correction is exactly the wick that we see on the weekly time frame. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And we can see that currently we are approaching, and we have approached, the zone which is in between the 50% and 0.618 of the Fibonacci taken on the impulse. We also know that this retracement was definitely expected. Why it was expected? Because the market had created an overextended M formation. And after an overextended M formation, you want to see the market create a retracement back to the previous support, which is now term resistance, which is exactly what the market is currently doing. So on the technical side of the market, everything is clear. Monthly, weekly, and daily are showing a possible continuation to the downside after a little bit of more retracement to the upside. Let's go and see what we have from a COT perspective, so commitment of traders, to see what hedge funds are currently doing on these two pairs, so on the AUD and on the CHF, actually these two currencies, the AUD and the CHF. Now, from an AUD perspective, what we can see is that with the last report, we haven't seen any proper shorting. We actually have seen 5.6k shorts getting closed, which is definitely not good. Net positions have decreased from 16k to 6k in the long term. However, we can see that with the last report, we increased net positions from 3.8k to 6.7k, with currently 61.1k longs and 54k shorts. So we still don't see the shorting that we need in order to create this continuation to the downside. Hedge funds still need to add proper shorts on the AUD. And if we go and see what we have from a CHF perspective, we can see that as well, we don't have the confirmations that we need. In fact, we can see that with the last report, 4.7k longs have got added and 2.5k shorts got added, which means that way more longs got added than shorts. And in fact, net positions increased from 12k to 14k. Now, in the long term, yes, we went from 1.4k to 14k net position. So yes, CHF is quite strong. However, we don't really see the massive longie that we would like to see on the CHF, which could easily create this move to the downside, even though hedge funds are still not adding the shorts on the AUD. So we do need the shorts on the AUD if we are to create this move to the downside. And at the moment, we don't have those shorts. But that is something that we already can clearly see only from a technical perspective. Why? Because here from a technical side, we can see that at the moment there is absolutely no bearish pressure. Okay, we can see that hedge funds are not shorting, because even if we go down on the 4 hours, we can see that everything is still bullish. The market is easily creating higher highs and higher lows without any kind of bearish pressure. So we can clearly see that hedge funds are still not interested in the shorts. And in fact, we expected when looking at the COT data that we wouldn't see any proper shorting, which is in fact exactly what we have just seen. There is still no shorting. So the way in which we will be approaching this with students is, as usual, being reactive and not predictive. What does it mean? Now, as usual, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame to look for confirmations and entries is the 4 hours. And at the moment, as we have just seen, on the 4 hours, everything is bullish. And until everything will be bullish, it means that hedge funds have not been adding any shorts. So obviously, we don't want to be looking for any shorts. So what we will be doing with students is, during this move to the upside, we will be monitoring price action from a 4-hour perspective. And we will be waiting for the market to shift from a bullish market as it is right now to a bearish market. And only if we will see the market shift from a bullish to a bearish market, at that point, we will add AUD CHF to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse correction and impulse pattern to the downside. However, until everything will remain as it is right now on the 4 hours, there is absolutely no opportunity to be looking for any shorts because clearly hedge funds are not shorting. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, and take profits, as well as having me answering personally every question that you have every single day. So I really suggest you go and check out the program. The link is in the description, and I will see you in.